Thanks for joining us. I'm Marlin Bohling with a look at our ag commodity trade today on a Monday, and I'm joined in studio by Chris Swift of Swift Trading Incorporated, and he's based in Nashville. Welcome aboard.
Thank you, Marlin. Good morning.
So we had a softer start this morning.
Slightly.
Let's take a look at just how soft we are. Are we maintaining that status? Let's go take a look here right now. Okay, on the corn, well, we are lower, but not where we were on the open, I'll point out. We have July corn down 5.5 at 3.46 and a quarter. So we've elevated off of our earlier low by about 3 cents now 3.5 cents. December down 5 at 3.67. Same story there. Now, what about soybeans? Well, soybeans had some pretty steep losses to begin with. Right now we have July at 7.94 and a quarter, which is down 15, but it's off of its earlier low this morning by about 3 cents. November down 14.5 at 8.18 and 3/4. That's also about 3 cents off of its earlier low this morning. Important to note, May and July both under $8 now, believe it or not. If you look at the wheat trade in Chicago, we have that July contract 2.25 lower at 422.5. So it bounced about 4 cents off its earlier low and then just stayed there. It's like stuck right now. Kansas City wheat on the July contract is now trading at 384.5, which is down 2.5 cents. And that is still at a pretty steep discount to that Chicago wheat trade, the way it looks. Let's take a look at Minneapolis wheat and see what's going on there. We currently have July down 4.25 at 5.12 and 3/4. So, all right, Chris, your thoughts on this? We had a sharply lower open, came off of it a little bit, but not a lot. What do you expect out of today's trade?
Probably still soft. You know, Friday's WASDE report that came out showed a little bit more grains than we had expected worldwide again, and then with no tariff resolve on Friday, further retaliatory tariffs by China over the weekend, and there's just not a lot to look forward to, and it's even drying out a little bit up in the northern tier after this weekend, so maybe they are going to get a little bit more corn planted, and we know we'll get plenty of beans planted.
So Tim Ross was talking earlier, the temperatures could get up into the 80s and in the plains, the Corn Belt, maybe even the 90s in the western plains, the high plains area. So, yeah, maybe we'll see some planters running this week, but I don't know how much ground they can make up. They can't. It's not like they can go out today and start in some areas. It's going to take a while.
They'll have a lot of prep work still left to do.
Yeah.
But they can probably run all the way till the end of May and still get it out and not damage yields too awful much.
How do you handle a market like this when you're trying to figure out how to start marketing the new crop as you're trying to get it planted?
You know, I don't know from our cattle producers. We've been buying call options. That's the only thing, because now that the spread between fats and feeders have begun to narrow and increase the feed yards profit margins, we've just been looking at corn as one of the only things that can really impact that right now. So we're buyers of calls in the corn market while it's down here.
What about soybeans?
Soybeans, I don't know. Soybeans sure look rough right now, and especially soybean meal. New contract loads in the soybean meal. I'm almost positive soybean oil. So there's nothing really positive about the soybean market right now.
So were you surprised yourself personally to see the production numbers that high on corn and soybeans?
I was on corn. Soybeans I wasn't, because we figured a lot of corn acres would go to soybeans. But no, I wasn't on corn. I was a little surprised. But we still may not get those acres out yet.
Right. And we won't know for a while.
Probably another 2 to 3 weeks.
Oh, boy, one of those years again. Okay, well, sit tight. We'll come back in a moment, and we will take a look at what's going on in our livestock trade here on a Monday. We're back with Chris Swift right after this. Well, we're joined again by Chris Swift of Swift Trading Incorporated in Nashville. Let's take a look at our livestock trade, and then we'll get Chris's thoughts on the market action that we're seeing on the live cattle trade right now. Severe losses here. We have the June down $1.98 at 110.47. We have August down $1.38 at 107.53. I will point out it's about 60 cents now off of its earlier low this morning. And we have the October down $1.60 at 107.42. So all the months on the live cattle on the table here are over $1 lower. Let's take a look at our feeder cattle side. Right now on the feeders, we currently have the August contract $1.95 lower. We're at 144.88, and we have September down to 175 at 146.03. On the lean hog trade today, Remember, we opened up and the deferred months went sharply lower, and then they elevated back off of that. So right now where we stand is we have June lean hogs trading $1.38 lower at 88.30, and that's about $1.50 off of our earlier low this morning. We have July down 90 now at 89.85, and August down $1.45. So a bit of a bounce in the hog market right after the open here this morning, and I mean it dropped like an anvil right at the opening bell on the deferred contracts. I thought that was interesting. Not so much the front months, though.
Well, and I guess the front month's still holding premium, and China still needs pork. We're very much under the impression of that. Other than that, I'm not real sure. It has baffled me to see the pork futures be going down just about every day, and seeing some of the pictures coming out of China where they are literally in some depleted supply issues there. So I'm not real sure.
So do you think the hog trade is what's weighing down the cattle market right now, or does it have its own fundamentals that are acting as an anchor?
I think the cattle market has its own fundamentals, and as we missed the grilling season. So the grilling season, the very end of April through May generally tends to be very warm and nice, and in the Northeast we just have not had any kind of good weather at all where people can get out and enjoy. So although the demand is very good and is very stable, we're missing that big push where we usually like to get out and grill and would consume more.
Doesn't seem like the supermarket prices come down that much.
No, they hadn't, and they may not for a while. And the live price is still holding up. We're still trading above 120 in the fat market this week. So last week we did.
Okay, we were talking earlier in the program about the Dow. And the Dow at that time, about an hour ago, was down like 430 points. Right now it's down 532, I believe. How much impact does that have when you look at the beef and the pork markets, especially when you consider the consumer buying power?
Consumers tend to relate their health or to their wealth, and the wealth tends to be related to the equities market. So anytime you start to see the equities market go down, people have a consensus to feel like maybe they're not quite as wealthy as what they were the day before, and that does have some impact on spending. What we notice is how wide the spread is between equity prices and commodity prices. That doesn't really mean anything other than equity shares are really, really high, and commodity prices and a lot of those companies that produce commodities aren't as in stellar position or shape as what some of the other companies that are promoting those stock issues do.
Interesting
stock
stuff.
prices, the stock prices.
Interesting points, and thanks for bringing that up.
Sure.
I appreciate that very much. Also interesting where the corn market down and feeders not reacting.
Right.
Well, it used to be they would, but not today.
Yeah.
All right. Thank you so much. Appreciate everything. Chris Swift of Swift Trading Incorporated right here in Nashville. So, Janet, that's the way things are set up right now.
All right. As always, Chris, Marlin, thank you very much.